It's one small step for man, one giant leap for mankind.
Welcome to The New Next, a podcast that addresses current events and how they will impact the future.
So CNN Business ran an article. Well, I guess that's from Reuters that ran it, or wrote it, but it's posted on CNN Business. Even 1.4 billion people can't fit in all of China's vacant homes, ex-official admits. It's, Chinese real estate is the biggest asset class in the world, even bigger than the U.S. equity markets. And it's in a very difficult position right now. A lot of people think it's near crash. So, it's, let's see, when is this article from? So September 23rd, about a week ago. This has been a pillar of the economy for quite a long time. And, places like Hong Kong are still strong, but there's maybe not enough real estate in the right areas, and not enough size or space in the big cities to really have it. But you've had these developers that have developed massive amount of space over the last 20 years that are nearing default, and it's just really really difficult. So at the end of August, the combined floor area of unsold homes stood at 7 billion square feet, which is wild, equal to 7.2 million homes based on an average home site of 90 square meters. So it's very interesting. Like, this could be a huge contagion point for the global economy. And it could be, one of the factors that forces China into a more significant military presence. Because, granted, they control their own currency and it could print more money, but this has been such a huge growth factor for the country. And if it crashes, it's going to have to, the economics are going to have to come from somewhere else. So, yeah, wild times. Let's see. Let's check out and see Evergrande Group. So I believe some of their leadership were just arrested, and I assume for what's deemed by fraud from the Chinese government. But so the chairman is investigated on suspicion of transferring assets offshore, while the indebted property developer struggles to compete on finished projects. It's working to, they're pretty much trying to stay alive. And what you see, it's the same function as the Ponzi scheme, right? Issue more debt to pay off the last stuff. Evergrande's run into difficulties because they're currently under investigation and are not able to issue new debt to an investigation because of an investigation into its main China unit. So there's a group of offshore creditors planning to join a court petition to liquidate the developer if it did not submit a new debt restructuring plan by end of October. It has over $300 billion in liabilities, which is quite insane when you think about a single company. Let's look at so Prologis, American Tower. These are your biggest developers in the U.S. So Prologis Group has 113 billion market cap, and Evergrande Group has 300 billion of outstanding debt. We're public storage market cap of $52 billion everywhere. We're really in. I mean, it's quite wild to think about seeing the largest developer in China potentially blow up, and seeing what sort of contagion that has on a U.S. market, which is already struggling. The U.S. consumer is struggling, and commercial real estate has not recovered from COVID. It's in a huge dire time. So we'll check back on this. This is something that we've been talking about for quite a while, but when the largest market in the world is having big troubles, that means a lot of difficulties potentially for a contagion in financial markets too.
If you would like to learn more about the New Next podcast, find us at thenewNextPodcast.com, where you can suggest a topic you would like for us to cover. If you enjoyed what you heard, share the podcast, tell a friend about it, or rate us with 5 stars.